What an absolute bloodbath out there. And the truth is that it's do or die time for Bitcoin and for crypto, because if we don't get a bounce at this level, I don't know what happens. It's good game if we don't get a bounce here at this level. And the reason why I say that is not because I'm being alarmist, is because this is a very critical level. Not only is it the previous cycle's all-time high. Now you can see that that's the previous cycle all-time high, 69,420. But it's also the Trump pump level. So this is the level that Trump actually came into power, and this is the level that Bitcoin actually started coming from, and we've retraced that level. And if we don't bounce from this level, it's not just about the chart levels, but it's about breaking a 15-year tradition or a 15-year rule with Bitcoin. Bitcoin always respects one rule. And the rule is that in every cycle, when we put in the low is always higher than the high of the previous cycle, or the same level as the high of the previous cycle. And you can see that on this chart on all levels. And if we don't bounce at this point, we've broken this 15-year cycle rule. Now, I want to talk to you about exactly what happens when we do break away from that 15-year cycle rule, because it has a lot of implications for funds, for asset managers, for allocators, and for belief in the asset class. And then we should probably spend some time talking about how bad this can actually get. So it's not a great day out there, and it's not a great show to be making, but here I am, bring you crypto love and crypto wisdom. Let's get this one on the road, guys. Holy moly, what a bloodbath out there. And I mean, these levels have to hold. This level is not a joke of a level. This is probably the most critical level in this entire cycle. The 69,420, which is last cycle's all-time high. We've got to hold that level. And if we don't hold that level, we've got to at least hold the Trump pump level. And the reason why we've got to hold the Trump pump level is very simple, right? Because if you think about when Trump basically came into power, it's not about the fact that we back at this level. But since that time, the DXY has slipped by 15%, which means that actually, in real terms, if you compare it to dollar adjusted real values, you're talking about we are now 15% lower than we were when Trump actually came into power, and that's not somewhere that we actually want to be. It's somewhere that we want to really avoid. And the reason why I say we want to avoid it is because, again, when you look at this level and you compare it to what's happened to Bitcoin in the last 15 years, what you can see is that every cycle, the previous cycle's all-time high has served as a very valuable support resistance level. So let's go to 2014. If you go to 2014, you can see we put in the high of $1,163. But then when we corrected, we respected the previous cycle's high. And then when we went from there, we went to the 2018 all-time high, which was around 17,000 or something like that. But then when we came down, what you can see is we respected the previous cycle's all-time high. Same thing in 2021, we went up, we put in the 69,420. And when we corrected, even after the FTX collapse, we corrected to the same levels of the previous cycle's all-time high. So now what we want to do is we really need to respect this level, because if we don't, then we're getting into uncharted territory. And as this tweet here actually says, which I think is very important, it says, Bitcoin is now 1% away from breaking a 15-year market rule. That was before Bitcoin got to where it is right now. Price is hovering at around 70,000. Now it's about 69,500. The previous cycle all-time high sits at 69,000. Bitcoin has one long-standing rule across cycles. Every cycle doesn't start a new downtrend below the previous cycle's all-time high, every single time. That gap is tiny, but structurally, it's massive. It's not a coincidence, it's a structure. 2014, 2018, 2022, I showed you the charts. Previous all-time highs always flipped into long-term support. Psychological, structural, and institutional. Now Bitcoin is sitting directly on that historical line. If price starts accepting below 69,000, this becomes the first cycle in history to fail that rule. It's not just a narrative shift, it's a market regime change. Because when the cycle breaks, the long-term models get questions, fund de-risk faster, positioning shifts, and the four-year rhythm weakens. This is where bull markets prove themselves. Strength, defense, structure, and rewrites history. A clean hold above 70,000, and we keep the higher low structure for markets. If we lose it convincingly, the fear won't come from the headlines, it'll actually come from the price moves. If the bulls are ever going to step in, this is the time that they need to step in. And the bulls need to step in really quickly, because otherwise we are going to lose that level. Because if I look at where we are when it comes to that level, it's looking very scary. At the same time, I don't really like what I see with silver. And I'll tell you why, because as you know, silver put in the all-time high here at 121, and then it bounced. Now, as you can see, it bounced to about 91, and then it rejected at 91. And right now, as we stand, it's put in a higher low. But if we break below the $71 level, then I can say that silver is absolutely going to break down. And remember, in the last couple of days and weeks, when silver has broken down, so has Bitcoin, and so have the other markets. With gold, it's slightly better, but still what we want to see with gold is we want to see a clear attack of this $5,600 level. If we don't break this $5,600 level, then we're basically breaking down over here. And if we break below 4,410, then I'm again expecting much more blood on the streets. Speaking of blood on the streets, the S&P 500 down another 1% today. So we are getting a slight repricing. I'm not even going to say it's a correction, a slight repricing of the S&P. I suppose if I was looking for a silver lining here, I would say that maybe what would happen is that gold and silver would top. And then as gold and silver topped, like they did in the two previous cycles, we'd get Bitcoin actually running, and we'd get Bitcoin actually stealing some of that liquidity. But again, I'm not taking a bet on that. But it's worth also noting that right now, when you look at Bitcoin, it's never ever been this oversold against gold. So in the entire thesis of Bitcoin, in the entire life cycle of Bitcoin has never been this oversold against gold in its entire cycle. So if it's going to bounce, it needs to bounce very, very, very quickly. Otherwise, it continues to be a very, very, very disappointing cycle. And when I say a very disappointing cycle, when you look at the numbers, it is the most disappointing cycle we've had of all time. So these are all the previous cycles. Obviously, 2012 was the most aggressive, and then the 2016, and then 2020. And they're getting more and more less aggressive, so to speak. So more and more subdued. And this one has definitely been the most boring or the most disappointing cycle of all times. Now, the one theory here is that because we never went as high as we went in all the previous other cycles, that when we go down, we shouldn't go down to the 200-week moving average, which is where all the other bear markets have ended. Because if we go there, then we're talking about the next level in this correction actually being 60,000, which is a pretty scary level. Like that's a pretty scary level. But that would be the final line of defense. If we went below the 200-week moving average, from that point on, really all bets are off, because from there we're in uncharted territory, and then I really don't know how to call this, or you can't really listen to anyone because no one has the experience, or no one's actually ever been there. For now though, if you look at the sentiment out there is absolutely broken, and probably rightfully so. I mean, look at the fear and greed, and if you look at the chart of the fear and greed, and you go back, I mean, I don't recall a time when fear and greed was this low. Actually, I mean, here the numbers here say that during FTX the fear and greed was this low, but I think that it was very, very different. As I said, market sentiment back at 2023 bear market levels, and that's what a bear market is about, though. And when I say that's what a bear market is about bad narratives taking control of the cycle, right? And that's, like in a bull market, you can get bad news, but the bad news is completely brushed off. In a bear market, the bad news actually surfaces and drives the narrative and drives the price even lower. And that's the part of the cycle that we're actually at. And you got to be super careful when you hear these things to be able to debunk what's real and what's not real, because right now the media and the sentiment are bringing up the wrong stories to the top. And I've seen this, I saw this happening in the last bear market. And it is because people are trying to justify the move in the price. And I'm seeing it happen again in this bear market. So what am I seeing? Well, I'm sure you've seen the same things. The first thing is the good old Binance. The good old Binance is insolvent story. So, well, it looks like it's all unfolding. The truth is coming out. Binance is insolvent, and they're solely responsible for 1010. I don't think Binance is insolvent, to be honest. I know how profitable exchange businesses are, and I know how profitable the Binance exchange business is, and I don't think that Binance is insolvent. They've also debunked this thing because there's this letter going around that says that he got a cease and desist. He didn't get a cease and desist. The cease and desist letter is a fake letter. And so you can see these are the wrong narratives which are actually basically coming onto things. Where did this start? There were some technical difficulties affecting some withdrawals, and it's fixed. It's all back according to plan. Nothing happened. Nothing happened. And what 𝗖𝗢𝗣𝗬 says, and she's now the co-CEO of Binance, he says, Some friends in the community, sorry, she's not the co-CEO. I think her title is, she's the co-founder. Some friends in the community have initiated a withdrawal campaign, and that's the withdrawal campaign getting people to be scared. Although the number of assets in Binance addresses has increased after the campaign was launched, I believe that regularly initiating withdrawals from all trading platforms is a very safe and effective test. So that's what's happening on that side. Then we've got the other good old faithful bear market narratives. And the other bear market narratives that are old faithful is the Tether depegging, right? And again, this is absolute bullshit. So where did it start? It said that Brock Pierce appears in the Epstein files, and Brock Pierce is one of the founders of Tether, and he was one of the founders of Tether, that's true. But Brock Pierce hasn't been involved or affiliated or associated with Tether for many, 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 many years. And he was in the thing. And Tether is not depegging. I mean, okay, it is depegging slightly, but that's normal. These are normal depegs. And not something that the market should be worried about. So someone, I mean, again, fearmongers say USDT showing signs of depegging. This is no longer a level that can be ignored and should now be closely monitored. I think by now we know that Tether is fully backed. It's the most profitable company, and they have attestations that they not only have the money, but they are over collateralized. So I don't think that USDT is going anywhere. Just by the way, if there's one risk to USDT, it is that the US government takes action against USDT. And the US government wouldn't do that because why? Because Tether hold more treasuries than most countries hold. And if something was wrong, they'd have to dump those treasuries into the market, and that would completely destroy the US treasury bonds. So again, more bad FUD. Then you're getting a technical analysis FUD. And I mean, again, when charts go down, they print negative patterns. And when they print negative patterns, then, well, you know what happens, right? And so Peter Brand says, and I'm trying to get him on the show actually, he says, hey, crypto followers, the nature of a decline in Bitcoin, now 8 days of lower lows and highs, has all the fingerprints of a campaign selling, not retail liquidation. Seen this before hundreds of times over decades. Never know when, of course, this pattern ends. No to trolls. So he's basically saying this is now systematic selling. This is not retail liquidations. Also, I mean, people sending me charts like this showing, look, we're going all the way back down to that 57, 58,000. That's the that's the chart FUD. All right, and then the other FUD, which also comes out in the bear market, is the quantum resistant or the quantum FUD, right? So we know this quantum FUD. I'm not going to get back into it because we've spoken about it for days and days and days. But the one revelation that I've seen is that somebody actually went and interviewed all the Bitcoin devs to find out like what the Bitcoin dev feel around quantum. And remember, the problem with quantum is not the threat itself. It's the fact that the developers aren't doing anything about the threat. And that's what's worrying the markets. And so when they went and asked the developers, a lot of the developers, this guy, Peter, I'm not even going to try and mention his name, looks like Wheelie, acknowledges quantum computing as a real threat, but theoretical. He says there is explicitly no urgency, participates in discussions, but does not advocate action. Greg Maxwell has discussed post-computing signatures technically, but never stated a risk assessment, notably silent given his outspokenness. Jonas Nick, one of the few influential devs working on post-quantum research, believes now is a good time to put in a post-quantum proposal. Anthony Town says, discusses quantum attacks historical, but has not expressed a view on the urgency or likelihood. Adam Back, he dismisses quantum as 20 to 40 years away, if ever. Gloria Zhao views quantum as a 30 to 50 year problem. Alex Morkos has not publicly assumed. So you can see here that they're either in denial, or they know something that we don't know, or they're looking at it through a different lens, right? And as Charles Edwards says before, he said, we have to, 2025 is the year that we have to deal with quantum computing. So that's another one of the narratives. Then you've got the OGs, and the OGs are selling. And maybe, and they're not selling, they're dumping like they're still taking tons of profits. I mean, look at that. They still, the levels of OGs actually selling, and I'll make this chart a bit bigger so that you can actually see it. It's not looking good, Brev. It's not looking good. It's not looking good out there. Now, on top of that, there is a completely new set of FUD that's coming out. I don't know if it is FUD, but there's a new set of FUD that's coming out. And that is, believe it or not, the Epstein files. So now it looks like Jeremy Epstein, was actually somehow involved in Bitcoin. He was, I mean, there's something strange in the new Epstein files released this morning, and it connects directly to Bitcoin's early system. Here's what's happening. The biggest red flag is how close Epstein was to funding channels. Here are the main links. MIT funding. Epstein sent $850,000 to MIT between 2002 to 2017. Part of these supported MIT's digital currency initiative, the group that paid Bitcoin core developers during a funding crisis. He had a developer correction. The DCI was paying people like 𝗥𝗢𝗔𝗓, Vladimir van der Laan, the Manhattan meeting. Email showing that Epstein's inside Epstein's mansion with 𝗥𝗢𝗘𝗏, Larry Summers, and they discussed Bitcoin long before it actually came mainstream. The Steve Bannon connection in 2018, Epstein mailed Bannon asking him how crypto taxes worked. So he was very, very, very close to Bitcoin. He invested in Bitcoin. He also invested in Coinbase, funny enough, right? So he invested in Coinbase. He invested in Coinbase at a $400 million valuation. And actually, if you look at Coinbase today, it's at a $45 billion valuation, which means that Epstein would have been up 100x on that investment, believe it or not. Crazy. Also, as I mentioned yesterday, a lot of people are leaving the industry. And another one of the casualties in the industry is Samani. So I don't know if you guys saw this, but we saw a message today, a tweet today from Samani. I've decided to step back from Multicoin. It's a bittersweet moment for me because my time in Multicoin has been some of the most meaningful and rewarding of my life. That said, I'm excited to take some time off and explore new areas of technology. So he's kind of like, he's going out and saying, look, I'm not remaining in crypto anymore, and exploring new areas of technology. Now, let me tell you what's actually happening here versus what you're actually reading. So I'm assuming that Samani has a restraint of trade, and that if he leaves Multicoin, he cannot compete with Multicoin in any shape or form. And so I think the fact that he's saying that he's going to take some time off to explore new areas of technology says that, hey, I'm leaving Multicoin, and I know why he's leaving Multicoin, and the reason is, I'm assuming the reason is, in fact, I heard the reason is that him and 𝗕𝗓 aren't getting along, and they had to basically make a decision. One of them had to go, one of them had to stay. And Carl's basically left Multicoin. And I think when he's saying he's taking some time off to explore some new areas of technology, which is, by the way, what they said in the letter over here, I guess that means, hey, I'm under restraint of trade. I'm not really allowed to compete with the company. So what am I going to do? I'm going to go and explore new areas of technology. Anyway, they're having a call later today, which I'm going to actually join, and I'll feed back to you about it. But it doesn't look good for the industry, where one of the mavericks of the industry, one of the pioneers of the industry, basically says, I'm going to go and explore opportunities in other industries, specifically not when we're getting into a bad market. And now people are basically fighting and saying, Samani is leaving Multicoin to explore new areas of technology. 𝗏𝗏 is leaving EigenLayer to explore a startup. Vitalik is admitting that layer 2s don't work. And so the bad narratives perpetuate the bad narratives. Yes, so that's that. And then you got the DATs basically selling and basically a whole mess. Guys, this is what a bear market is about. When you're in a bear market, the bad news surfaces to the top, and it's designed to make you drop your coins. It's the whole design of a bear market is that the FUD rises to the top because people want to justify why the prices are moving so far down. And that is when the coins change from the weak hands to the strong hands. That's basically what happens here. And what I'm assuming is, first of all, take comfort in the fact that this is the least worst bear market so far. In other words, it's the slowest decline in a bear market so far. It was also the least harshest bull market, the least strong bull market that we've had. So take cognizance of that. Also, take cognizance of the fact that bear markets are about narratives, and that you're going to get all the bad narratives actually rising to the top. This bear market is not as bad as other bear markets on a relative basis, just so you know. So I know it feels bad right now because the numbers are bad, and I know the narratives feel bad, but that's what always happens in a bad market. And it's designed to take away your coins. It's designed to make the weak hand sell. My best advice to you is, if you have conviction about the asset class, then my suggestion is that you either hodl. And I don't know, I tweeted earlier and I kind of said, like, is hodl still a thing? Because I don't actually see people saying hodl. Is it actually still a thing? There could be a bounce. As I said yesterday, Bitcoin tracks this IGV ETF. And if you look at, the IGV ETF is a Microsoft, Salesforce, it's a software services ETF. That thing touched a very important support line over here, and it touched it on very big volume yesterday. So, maybe we'll get a bounce. Maybe it's time for this bounce, and maybe we'll track the bounce. if there's ever been a time for a bounce, then now Bitcoin has to bounce. It's as simple as that. Because, as I say, if we break below this level, all bets are off. I mean, then the next level is 57,000, and then below that, I don't actually know what happens, to be honest. But I will be here, regardless of what happens. I will be here, and I'm not going to write a letter saying, I've moved on to AI and biotech, because I don't know anything about AI or biotech. So let me know in the chat if you guys are going to be here with me. Same time, if you want some hopium. So read this from Balaji. Says, and this is in response to a tweet from this girl called Cami, and she said, I'm telling you, the next 3 months are about to get wild. All the smart people will either try to go to one of the free crypto projects with sustainable revenue or leave crypto completely. We saw three of the smartest people outright leave crypto in the last 48 hours. In the last cycle, Jason Calacanis said, if you're in crypto, pivot to AI, and that was just before the biggest bull market ever. I don't know if you remember that post. And so the same thing's happening here. So what does Balaji say? He says, I've never been more bullish on crypto because the rule-based order is collapsing and the code-based order is rising. So the short-term price doesn't matter. As international law breaks down, we will need not just on-chain currencies, but on-chain companies. As a post-war order breaks down, we will need post-internet order. States will fail and the networks will take their place. We need internet capitalism, we need internet democracy, and we need internet privacy. So we need cryptocurrency. So, chaps, on that note, I'm going to love and leave you. I'll see you again tomorrow. Until then, trade well, my friends.